Hey, today's Wednesday. We had actually a really insane expansion. Today was really an interesting trading day once again, as always. Yeah, really learned once again something new as well. We'll go into it. But yeah, that's the business of today. As you can see right here, really aggressive expansion higher. Was actually to be expected because we have such highly engineered buy-side liquidity. Um, Still, the opening was not really easy. Why? Because we really fell short of the New York open kill zone, says the liquidity right here, only trade back to the midnight opening price. But also, once again, just shows to us how important and also, yeah, really intense level the midnight opening prices. So, really reacting off it right there. Um, but before we go into the executions and what I could have done differently or better, yeah, I want to break down once again really quick daily conditions. So we are trading at all-time highs. And if we do that, yeah, we really do not want to trade against the higher time frame trend actually, because especially if we have Wednesday, we can expect a yeah, really higher time frame expansion. Also due to the fact that Monday was only an inside day. Also yesterday, really a small price range day. Therefore, for today, we can expect definitely a expansion to the upside. So a bigger body on the daily chart. With that, we can already drop to a 50-minute chart. What I was basically analyzing right here is we did basically our damage to the downside yesterday. So really came down and also took out the low right here, what is to me really important also regarding regular trading hours. I will show you in a second. But already through that, we are definitely in a market maker buy model because it's also, even if it's not really clean, but it's a V-shaped market maker buy model. We came down, scrapped external sales liquidity and retraced from that. So definitely right here in a market maker buy model. And from there, we really traded higher and we were now really consolidating basically between the upper quadrant level and basically the high of our new week opening gap. But what's really important is that we yeah, fail to close any bodies below the midnight opening price. We're really staying above it. That's already indicating bullishness in my opinion, definitely. What I was also highlighting right here is the rejection block. That was a bit something what concerned me, what was a bit a more bearish indication. Why? Because we have still our daily SMT being in play right here. So yes, still did not take out the high right here. Also is now already or is now still trading below all-time highs. And therefore, because we have this huge hourly rejection block, to me it was a bit more difficult. Definitely we are trading at all-time highs. The daily was definitely bullish, and also right here the consolidation, nobody's above the midnight opening price, market maker buy model being in play. It looks to me like we are definitely in a market maker buy model, but it could have also been a case that we wick higher, maybe sweep the high right here, and from there on, kind of once again sold off maybe. And therefore, yeah, I was really also taking attention to the wick right here. And also due to the fact that we had also the lower time frame SMT right here at daily at the daily high basically being in play, and also to me, yeah, it's a short-term market maker symbol being in play definitely right here. Therefore, I'm a bit confused, I would say, why we were able to take out the New York open kill zone by sales liquidity right here. But I think it's just due to the fact that we are really bullish. But I mean, yeah, as you can see right here, really expanded higher afterwards. And I think in that case, with that opening price is enough, and our market maker buy model is already in play. Probably also with sweeping the low right here with pre-market liquidity. But yeah, I don't really prefer a pre-market liquidity sweep when it's really like equal lows and completely obvious. Okay, then I'm fine with that. I would call we have a market maker buy model being in play right here. But for that, yeah, you see right here we needed a second liquidity sweep because maybe it was not really enough, or I don't know. But definitely would have like that we sweep the New York open kill zone as liquidity, then it would be really a obvious market maker buy model being in play that we are going to trade higher. First, before we go into the executions, I want to talk about, as always, regular trading hours. Really important approach in my opinion. Yeah, as you can see right here, what I talked before about or mentioned before is that we came down, basically scrapped the low right here, and that's to me really important because now we have also a market maker buy model being in play on regular trading hours as well, utilizing still basically the CE level right here. Right here, basically we had this huge rejection block and basically missed out on bodies being just placed, be printed at CE level right here. Therefore, I wanted to see that we revisit the level. You can see right here how we reacted to it, and from there on traded higher. But yeah, for a market maker buy model being in play, we need bodies to close in here, because in that case that's really inefficient. And that's what we got right here, and from there on we traded higher. So and that's why we have also this bullish opening, or I don't know if that's the case, but we do have a bullish opening, premium gap, 133 handles. Therefore, we are in trading conditions. Then we want to see that we trade back at least to the upper quadrant or CE level, and then utilize those quadrant levels to trade higher. We want to see that we respect those quadrant levels, either the upper quadrant level or the CE level, and then we want to see that we trade higher. That's really important. We were also trading back to the Monday's new open range gap. Yeah, just leave them on your chart if they are still basically in near distance. In that case, we were also right here trading back to the, I think, lower quadrant level with the wick right here. But yeah, from there on, it's also a bit, I don't know, I would not say difficult, but yeah, the 5-minute candle right here really displays below the upper quadrant level. That's indicating a bit more bearishness, but I think in that case, it's also just yeah, the 930 manipulation to the downside, which we want to trade against. So now let's go into the executions. So 930 opened up right here, traded higher with the wick right here, and from there really sold off, scrapped the low right here. To me, that's our 930 manipulation to the downside. We scrap pre-market SSL liquidity, and I think, as I now mentioned before, it's sometimes a valid market maker buy model being in play, also for the higher time frame to expand higher. Most of the time, I want to see it a bit more significant, so it's not really important liquidity right here. Still, to me, that's enough. We traded above the first fair gap right here, 945. That's where I want to buy if we trading. That's when I want to buy if we are going to buy or trade a market maker buy model. So 10 macro starts right here basically. Yeah, created as bearish SMT, got stopped. Yeah, I think nothing really wrong about it. I mean, going break even after we created SMT right here is a bit. Yeah, I think it's even valid because if we're going to trade higher, we will not stop in here. Why? Because we need to utilize the lower time frame market maker buy model. So I'm talking only about this one right here. So market maker, so sell side of the curve and buy side of the curve. In that case, we need to trade higher from here. We cannot even trade back. I think we should not even trade back into the first fair gap, first presented fair gap, because we want to see that we basically utilize this as balanced price range, downside delivery, upside delivery, and also that we create basically a balanced price range right here on the 5-minute chart, that we completely create this manipulation downside candle, this really large down close candle, and then instantly a up close candle follows. That would be perfect. Then we have a balanced price range and we can higher from there. In that case, basically liquidity sweep was not enough, and we come down basically once more, sweep the engineered liquidity right here. Why? Because it's also an advance of the midnight opening price. And also with that, I think we also traded back to the lower quadrant level of Monday's new open range gap. I think we have also now manipulation on regular trading hours, and that was really not really good displacement, I have to admit. So really small bodies trading slowly higher, completely obvious in that case. I mean, we got displacement right here, but yeah, actually we have not really enough displacement in here. That's really no clear structure. So we could have been also a bit more patient right there. But if you do not enter right here, you could also miss the move, because we could start displacing above the 830 opening price and then go. It's basically quick to the levels right here. So it's not really easy, I have to admit, today. Still, I got stopped shorted right here and took a first partial right here. And I think that was really basically what I did wrong right here. So the executions right here, once again, being just a bit too impatient, expecting a expansion, also knowing where my important levels are, but still I'm too impatient. I have not the right money management, and I'm still not really in the right time to participate in the right price move, which is in that case higher aligned with the higher time frame trend. I mean, if we short against the higher time frame trend, in that case, I think it's also not even such a bad setup because we have really bearish SMT being in play, obvious engineered liquidity, session liquidity right here, session liquidity right here, higher time frame quadrant right here. I mean, yes, we could have also just traded a bit lower, but yeah, we are really also regarding regular trading hours, we have a trending premium gap, so we are already in trading conditions. We have New York open kill zone buy sell liquidity and daily buy sell liquidity, and we are trading at all-time highs. So that doesn't really that's definitely not the best conditions for looking for shorts. Still, if we short against the higher time frame trend, I must only aim for the lower hanging fruits. In that case, should have closed my trade completely at the midnight opening price, and from there on, be a bit more patient. I mean, yeah, in that case, today the low was already in. I don't really like the huge wick to the downside right here. Also in the 5-minute charts, so that's really my concern. It's not really easy. So, yeah, huge wicks to the downside and to the upside as well. High resistance delivery. That's resulting basically in much back and forth on the lower time frames on 1-minute chart. But what I really want to get to is basically that I should have not just rushed the gun in here. I went long, got stopped, went short, got stopped, went long. So that's too much. That's way too much. I have to be more patient. If I don't know where we are drawing to next, I have to be more patient and just wait for, I don't know, 10 a.m. And I think with the candle right here, it's already then obvious that we are going to trade higher and not lower, because even if we do not respect the quadrant level right here, we are definitely respecting the fair gap. And I think sometimes in high resistance conditions, we should not always be too fixed on the CE level right here, which we close below. But with that, we are also basically balancing out the wick right here. So as you can see right here, we are perfectly trading back to CE level. That's also really important in that case. And also to the down close wick right here. So rejection block, we fail to really leave bodies to the downside. I mean, we closed one body right here slightly below CE. That was a bit why I thought, okay, maybe we are only finding resistance in here, but we should not really trade back to the fair gap. So our institutional order flow entry drill is with the wick right here. So 950.50, that's our institutional order flow entry drill. If we fail basically to trade lower from here, we are going to get stopped, and we are definitely going to reverse. So I think in that case our stop can be right here. So our stop out, I don't know where it was, right here. I'm not sure, or if I no, right here. Sorry guys, I think the stop right here is completely valid. So going basically break even right there, because we should not expect that we are going to retrace lower from there. But yeah, to short right here, to went long, to short, that was too much. That was definitely too much. Have to be more patient, but I think you definitely got the point. Then we traded higher. I was in a long position with three contracts right here, and we really fell short of the New York open kill zone buy sell liquidity right here, also the daily buy sell liquidity. And I think that's quite interesting. Why? Because we are with 10 a.m. we expanded higher, and I kind of expected it. Still, I was actually a bit messy today. I placed a buy limit order right here as my stop, got filled with three contracts, and we traded higher. Actually, I was expecting that we will see some kind of manipulation right here. So if we fail to trade higher with the candle right here, so 10-4, why? Because we have two down close candles, we trade into the fair gap right here. From there, we need to trade higher. If we fail to do that, we definitely will see manipulation to the downside. And why did I anticipate that? Because we have 10 a.m. and 10 a.m. needs to manipulate lower. We need this 10 a.m. wick to the downside before we can expand aggressively higher. And that's what we got right here. So we traded lower, got filled with free contracts perfectly at the low below 10:30 opening price. We could also look at it like this. I think that's really interesting because the down close candle right here almost perfectly reacts to CE level. So that's really important to buy below the 10 AM opening price is really institutional order flow in that case. From there, we aggressively traded higher, closed 3 contracts right here, sold 1 right here, sold 1 right here, and sold 1 right here. Not the best executions, but it was also not really easy, really aggressive expansion, and now we are really in high resistance. I think we are able to hold for 10:30. I think that's what we can maybe try for the next time. 10:30 is valid, or that we go out before 10:30. Until then, we can basically hold if we are definitely expanding higher. But yeah, I think that's basically it. So it was not really easy today to spot the objective right on. I think the daily objective or the higher time frame objective higher was obvious. I was just not really sure if the lower time frame was going to just trade lower into the liquidity pools right here. Still what I really need to improve on is just to trade less, to be more patient. That's basically the most important point to really feel less FOMO, fear of missing out. I think I'm content with the long right here, but getting stopped right here. I'm also content with shorting right here, I think, because I think it's also a really obvious liquidity pool, but then I really have to aim for only the midnight opening price, all 3 contracts closing right here. But it's difficult if you took a loss before. So maybe we should not even trade against the trend right here, and only look for longs, being really, really patient, and then basically wait how we react. So after we close below the first value gap, we see how we trade back into the first value gap, and then we see how we react there. We have to be patient. We close below CE, be patient. And then when we fail to trade lower right here, especially with wicking above the body right here, when this candle trades higher, we know, okay, we are going to trade higher. And then that's our entry. And perfect long in that case. Bit difficult to not be getting basically break even stop right here, but that's what you have to know in that case, that we will manipulate below the 10 a.m. opening price. So really not easy trading conditions lately. I think the whole April month was really difficult. Really, I think the most difficult trading month I had in my, 2.5 years trading. Because I know more than ever, and it's still really, really difficult conditions. So really difficult. Today was definitely a winning day. But could still made so much better and different. So that's basically what I learned today. Hope you learned something new as well, and see you soon.